What's going on, everyone? In this video, I want to talk about the Nasdaq 100 because it's a runaway train, right? It's becoming a lot more difficult to get long each and every single day just because of the run up that we've had over the past week. And we're coming off of basically three back to back to back consecutive gap up days. And a lot of times when you get gap up days, you're kind of waiting for that pullback, and then you want to kind of see some consolidation so you can get long. And essentially what's happening is we're showing up to the screens every single day, and the Nasdaq is gapping up through Asian London session, and then New York is running away, and it's seemingly not even giving you much of a pullback or much of anything to kind of work with. So you kind of have to just close your eyes and go long. It becomes a little bit more difficult the higher and higher we get, because it's a little bit more hard to manage your risk, right? The pullbacks, if you get them, could definitely be much larger than anticipated, and it could cause for a lot of problems, right? So let's kind of cover where we're at on the daily chart. I actually think that we're going to be pulling back a touch here very, very soon, whether that starts this week or into next week. And the reason being is, if we kind of look at this daily chart, and let me zoom out just a bit here. If we kind of look at this daily chart here, we are super extended away from the mean on the linear regression channel. So that price would be sitting at about 24,200, let's call it. And we are approaching the top linear regression channel. So I want to show you something on this chart. This is a daily chart. The last time that we were trading at the upper extreme of a daily linear regression, I have to go back a little bit further, was all the way back here, going back to the beginning of the year last year, right? So if you kind of notice here, rolling into 2025, right? Rolling into 2025 in December, we were actually trading at prices of about 22,400, and we came just a touch below touching that linear regression channel, okay, the top channel. So you can see here we started a little bit of a pullback followed by a dead cat bounce, and we never really took out those highs seemingly for about 3 months, okay? So we went into a little bit of a distribution period for 3 months. Was there volatility? Absolutely. When you go into volatility, it doesn't necessarily mean that it's just going to be consolidation, nothing but chop. There's definitely volatility here. There was a 1,000-point day here. There was a 418-point day, a 500-point day. So there's volatility. You can still make your trades long and short in the range. You just have to understand that those local highs and whatever, local low that we put in is going to be the range. Now, if I kind of just play this out from the last time we touched this linear regression top channel, this whole process lasted from December 16th until we finally started to break down below the midline here, and that lasted till about February 25th. So we're talking about 2 months here worth of back and forth distribution, right? Almost 3 months. Once we lost that mean, we had that, those tariff flushes. Everyone kind of remembers that. March and April, we kind of had those big, nasty declines there, big days. And then ultimately the market hit the bottom. And when it hit the bottom and started to reclaim the bottom channel, and then we reclaimed the midline, we've essentially been a runaway train since about April. So it's been about a 6-month absolute bull run here. Far more green days than red. Far more days where you can just get long and do nothing. So if you have felt the market's been a little bit more easy the past 5 to 6 months, that's why. So now let's get into where we're currently at on October the 28th of 2025. We're back up here towards this top channel. Now, I'm not going to say that we can't push higher, but there's going to be a little bit of a pullback. And some of those pullback areas that I would be looking for on the short term would be 25,850 all the way down to 25,200. 25,200 would be the first spot that I would like to see get touched for a significant bounce. So if you're trading equities, if you're holding, swing trades, definitely probably a good time to take some profits, maybe hold on to some stuff, but you want to be taking a little bit profits, kind of locking in those gains. And if you're going to reattempt to buy back in or look for a dip buy, if you're day trading, if we can get back down to 25,100, that would be a very, very good spot to kind of reset the chart. Now, if things get a little bit more dicey, what would be the most strongest level within the next 1 to 3 months that I could see us touching? That would be 24,100. That's going to be a real telltale sign of if this market's going to continue into the end of the year and the start of next year, 2026, or we're going to have a deeper continuation of a pullback. So the two significant areas that I'm looking at within the next, I would say 1 to 2 weeks to get back tested, 1 to 3 weeks to get back tested, 25,240. Look for that reset zone right in that area. The next spot that I would be looking for, 25,500 all the way down to 24,100. This area I want to see hold. This would change the bullish bias. If we start to lose this area down here, 24,150, that bias can change for the short term, and we've got a lot of room down all the way to 22,000. I could see that happening going into the start of the year. Typically between December and February, market likes to pull back from just a seasonality kind of standpoint anyways. But short term, if you're a day trader, what are you really looking for? You're looking for a top supply here of 26,388. So if we get into that area, you want to be very, very cautious, especially if you're holding a long position. If I go into the 1 hour chart here, we do have demand zones at 26,000 as well as 25,900. Look for bounces in those areas. But if we kind of push up a little bit higher than today's high and we kind of start to stall out, I would start marking out those highs, because you could be looking at some very, very good shorts into supply that you could start playing for the foreseeable short term. If I look at the weekly chart, okay, I want to really point this out. The weekly chart is also very, very extended. It's very stretched. This chart, actually, funny as it is, it reminds me of the COVID chart in 2020. Same exact thing. Big flush down 20-25% across the board, 40-50% across the board on some equities, and then just an immediate V-shaped recovery that just seemingly left everyone until we finally pulled back and had that bear market after that. But what I'm looking at here is on the weekly chart, 26,500. If we do touch this area, look for that pullback. Our strong support, again, it's going to be 24,300, 25,000. That's going to be your strong support. That's a good pullback there, right? Anything below that, we would be looking down towards 22,000. Now, for me, if this market is going to remain healthy for the next 2 to 3 years, what you actually want to see is pullbacks into these areas. Pull back here and pull back here, consolidate, and then start to push up higher. Anything below 22,000, we could look for a deeper pullback into 20,000. That would be a little bit later on down the road, probably closer to 2026. But that would also be a strong and healthy pullback as well for the market just to continue higher. Now, if the more that this market pushes up and up and up past 26,000, it's going to become very, very difficult. So if you're a day trader, you're going to expect a lot more uncertainty. You're going to see a lot more traders blowing up prop firm accounts because they're going to be getting long, doing the same thing that they've been doing for months, and you're going to get a nasty pullback, 50-point candle, 100-point candle, 75-point candle, 200-point candle, where it's going to chop you up and it's just going to destroy accounts. So you just want to be mindful of where you're at on the bigger time frame. The bigger time frame is telling us, it's screaming to us that we need a pullback. And I think we all know that, but we're kind of have all been wondering, when's that pullback going to happen? When's that pullback going to happen? For me, that pullback's going to happen within the next 1 to 2 weeks. Within the next 1 to 2 weeks, you're going to see a little bit of a flip where the market is now not so much gapping up and running, but it's kind of maybe shaking you out off the open to the long side, followed by these all day long or even partial days where half the day is spent with these big moves to the downside to get back into those supports, test to see where these buyers are at. And those are going to be the areas where you're going to want to try to bounce. Again, remain bullish as long as we're over 25,000. Seemingly, if we're over 25,000, macro-wise, you still want to remain bullish where you're looking for those bounces off of deeper supports. But what it's telling you right now is be cautious with the longs. And if you do get that early kind of spike, you can start to look for those intraday pullbacks into support. I hope this video helps you guys. Guys, if you want Apex evaluations, today is the last day for 80% off, $85 activation fee with that 1 day to pass. You can use my discount code DAnthony. I will see all of you guys in the next video. Make sure to give me a thumbs up, and I'll catch you guys all next time.